Hello and welcome to the show. We call it Molotsky on Money. What is this show all about? Well, the clues are in the title. We'll be discussing money, specifically investment strategies, taxes, estate planning, insurance, and many other topics, all of it designed to help you and your family improve your overall financial picture. The Molotsky part of our title comes from our panel. Their name is Molotsky. What a coincidence. Each week we'll have Stan Molotsky, president and founder of the SHM Financial Group, as well as Lee Molotsky, vice president of the SHM Financial Group. So stay tuned because we have valuable information on this show that we hope everyone can benefit from. And Stan and Lee, welcome to the show. Good to have you back with us.
Our pleasure.
Here on Molotsky on Money. You've been around since 1958.
Seems like yesterday.
I was just going to say, I mean, when you say that, 1958, it seems like an eternity ago, and you're not that old, so.
No, I was 3 years old when I started, maybe 4. That's right.
What have you seen? You've obviously seen a lot since 1958, but what have you seen change in terms of the stock market, financial planning, those kinds of things?
Just about everything. There's nothing that's the same. In fact, it's the theme, it's the motto of our business and our business plan, which is basically everything constantly changes, and you have to make adjustments and you have to change what you're doing financially in order just to stay even. If you're standing still, you're going backwards. So you have to constantly improve, modify, adjust, and change. So it's change, change, change.
It's interesting because you and I talk sports a lot. And how many times have I said to you, you said, well, how come that doesn't happen anymore? I said, everything changes. So we throw your line back at you a lot. But it is true,
it is
especially
so
in the financial planning world. Lee, you've seen a lot change. And I know you want us to mention that you're younger than us. So we'll get that out of the way right off the top of the show. What have you seen change in terms of, you've been in the business, since you've gotten out of school, basically?
Yeah, basically, my background is in accounting, and then I basically saw the light, as you say, and joined the firm back in 1985, and have been doing this ever since. So what I've seen in the industry, or in the industries, is the speed has significantly enhanced.
Is that because of technology?
Yeah,
is that because of the internet and all of those kinds of things?
That's certainly part of it. What we've seen significantly change is the expectations have gone from one level years ago, way, way, way up high as far as service is concerned and speed and execution. So what was expected 10, 15, 20 years ago, that which used to take maybe a week or two to happen, now is expected to happen overnight.
I mean, you see things like international things that would happen overseas. Back in the day, it would take 3 days, 4 days, 5 days before it would trickle back into this country. Now, as soon as it happens, it's automatically reported. You have the iPhones and you have all the different things people have instant access to the information. To me, and I'm going to let Lee talk about this in a second, one of the most fascinating things about this business, people have a variety of different programs. They have a variety of different things. Sometimes they're dealing with 2 or 3 or 4 different people. They have their tax work, they have their legal work, they have all these different documents, their savings accounts, their bank accounts, their brokerage accounts, all these different things. Well, we've partnered with a firm and we're making available to our clients what they call this.
It's a secure, triple secure cloud lockbox.
Which is fascinating.
And what does that mean?
So what that means is many people are used to dealing with the internet and dealing with their bank statements and brokerage statements online. Some of our clients and many people out there don't get statements anymore. They view their statements online. It's green, right? So you're saving paper. But what we've done, our partners have done, is allowed us to now make use of this service. It's a lockbox, secure lockbox, where all your documents can be stored securely in a lockbox, as well as all of your financial statements.
Is it a physical box? Is that what it is?
Well, you're a perfect person to talk to about this. It's not a physical box. It's a box in the clouds that you can access wherever you are via the internet.
Just think of this. You're here. Your parents are in Florida, California, the Midwest, or wherever. Something happens to them and you need access to their information. But how do you get that? You have to fly out there and do that. Now, through this system, you push a button, that they allow you to do, and you have access to all of their financial information. And if you have powers of attorney, which you should have, for your parents or vice versa, you then would be able to help them manage their situation if something should happen to you. And basically, conceptually, what happens, you go to our website, you click in your code number, which
Username.
changes every 2-3 months
Right.
to keep it secure. You push a button, and every statement that you have fed into this system from everywhere, bank accounts,
come up.
brokerage accounts, insurance policies, tax returns, copies of wills, anything that you feed into this comes out one hit of the button, and it prints it out if that's what you want, or one hit of the button and you can visualize and see whatever this is. Fascinating stuff.
And this all became or was developed because of a gentleman who lived near his parents in the Midwest. He moved away, and he was unable to, or having a difficult time communicating.
Well, they were getting older. I mean, they were getting older. and
Getting
they were-
older,
they-
more
they
mature,
weren't
and
well.
they were retired, and there were some issues medically, et cetera. So he decided that in order to make his life easier and easier for his parents to help them, he couldn't fly back and forth, down to Kansas anymore. So what he did was develop this with a bunch of folks in the computer world to help his parents.
Okay, what is this called? What is this system called?
It's a cloud lockbox.
Cloud Lockbox. All right, that's one, and that's the newest thing that
Fascinating.
you have, right?
Absolutely.
It obviously is.
Yes.
But I don't think a lot of people understand what you do. I mean,
Okay.
I know, I've known you for 30 years, so I know what you do. But do you find that many times people don't understand what you do? So I just want to know, how can you help somebody watching this show right now? What can you do to help them with their overall financial picture?
It's a pseudo-loaded question. The beginning, my response would be to you, initially, I don't know how we can help them until we really see what the individual is all about. Where are their issues? So what we initially do is initially sit down with someone and try and find out what it is that they're concerned with.
Okay, I'm 55 years old. I have 100,000 in investments. I want to retire in 10 years.
Marry well. I mean, right.
Good luck.
Find the right girl. Good
Okay,
luck.
can I solicit right here to marry well?
Absolutely. It's out to the audience.
Okay.
Anybody is available. John is available.
Okay.
50 million people are watching you
Right,
today.
Okay.
Right.
Well, that was a good solicitation.
There you go.
But
That's right.
but what in that scenario? And I was just throwing that out
Sure.
as an example.
Sure.
Is that something where you can help somebody?
Well, to start, sure. I mean, the idea is, like Lee said, you sit down, and the first thing you want to do is determine goals. What are your goals? What are your objectives? What are you trying to do? You just told us. What do you have to work with? What kind of inflow do you think you're going to have for the next, 10 to 12 to 15 years that you think you're going to continue to work to put into the particular program? And again, with this block of money, are there any inheritances that may happen, different things that could encourage you to enhance the amount of dollars that are available? And then it's a matter of sitting down based on the risk tolerance to determine exactly what makes the most sense today.
We need, in order to help you best, we need to know a lot about you. And we need to develop a plan, which takes time. It's not just, here's $100,000, what do I do with it? It's really a background check about you, what your true goals and objectives are, what your tax bracket is, what your family status is, et cetera. And really, what is the money for? That's the crux of it. It's not just, here's $100,000, do something with it. It's part of our planning process that we bring to the
There's
table.
more to it than just, oh, I heard about that stock or I heard about this particular thing.
That's not planning.
Yeah, right.
That's not, I mean, again, there are the stock brokerage side, been there, done that, evolved into the financial planning, used the insurance and the annuity things, tying in the will and the tax work. Our goal, our job is through the different affiliations that we have, is to put that all together so that the client actually has a plan. I mean, nothing works without some kind of a plan.
Okay.
And you have to modify that plan ongoing.
Coming up, speaking of plans, we're going to show you red ball, green ball. What is that all about? Well, stay tuned. It's Molotsky on Money. We're here every week at this time. Stan and Lee Molotsky are here from the SHM Financial Group, providing sound financial insights and strategies since 1958. And I'm your host, John DeMasi. We're returning with more Molotsky on Money, and we'll do that right after these words. Stay with us.
Do you know what your risk tolerance is when it comes to your investments? Do you know exactly what you have in your portfolio? The SHM Financial Group have developed a very important program called a financial stress test. It's simple, quick, and can help you in your future financial plans. Contact the SHM Financial Group to schedule it. Offices in Collingswood, Voorhees, and Lakehurst, New Jersey. Call 1-800-MONEY-SHM. That's 1-800-666-3974.
Welcome back to Molotsky on Money. I'm your host, John DeMasi, with Stan and Lee Molotsky from the SHM Financial Group, as we like to say, providing sound financial insights and strategies since 1958. A lot to talk about here on what we have remaining of the show on Molotsky on Money. But I wanted to ask you, Stan, in terms of a lot of the things that you do, I know you talk a lot about risk. And we're going to do something here to show folks what you're specifically talking about. But when you say risk tolerance, what do you mean by that?
Well, it means different things to different people, but it's a matter of saying basically, if you have these investments, you have these assets, how much of those assets, or how many of those assets, what percentage of those assets are you comfortable with that could possibly deteriorate in value? Nobody's happy, but you're willing to keep at risk to earn more than what you could possibly lose as far as the markets are concerned. So it's a matter of saying, okay, X percent I want to make absolutely sure never deteriorates in value, and the other part I want to take an opportunity to see what's going on in the marketplace to see if I can do better than the traditional rates of return in today's environment.
Lee, I wanted to ask you, is the stock market inherently, is that a risk for people?
Simplistically, yes. It is. The stock market has inherent risk. When we talk about red ball, green ball specifically, the stock market is a red ball asset. So we all know, and over the years it's always had risk to it. If you put $1,000 in a specific stock or a fund, it can go down in value. So to segue from Stan's discussion, if it can go down in value, it has risk.
And that's what you mean when you talk about risk tolerance. Everybody has different risk tolerance, correct?
Sure. Husband and wife has different risk tolerances. Sometimes the wife wants more risk, sometimes less risk, and we try and tailor the particular program in relation to their combined, risk tolerance. Sometimes they have assets that are, right now, you could have an asset sitting in a savings account earning a very low interest rate. That's at risk. It's at risk because you're losing to inflation and you're losing the buying power of that asset over a period of time. So that's an at-risk asset.
Yeah, a savings account, that's correct, needless to say. That doesn't have principal risk, but it has inflation risk.
Because you're not making anything, right?
Right.
You're not going to keep up with inflation.
Right. So
with something
the
like
risk of the asset losing value, no, but the purchasing power, it has purchasing power risk.
And that's what we try and constantly look at, is your purchasing power. What will that asset, wherever it is, relate to going further down the road as far as the potential buying power? Because with inflation eating into it, you need more in buying power down the road than you do today.
If somebody comes to you and says, I am in CDs, I'm getting 1%, my money is safe and secure, what you're saying is that is risk, correct?
Absolutely.
Because they're not making anything.
It's
In fact, they're
they're
losing,
losing.
right?
That's a different kind of risk.
Right.
I mean,
But that is
absolutely
that's
risk.
not, needless to say, that's not principal risk. It's somewhat inflation risk, that's correct, but that's opportunity risk.
okay. Now you were mentioning, Lee, red ball, green ball.
Correct.
We showed that on last week's show, but I'm sure a lot of people don't know what you're talking about. So we're going to put this up, and we're going to show people specifically. And why don't you walk us through this, Lee, and really tell us what, obviously the red is risk and the green is safe.
Correct. So
But now you have different degrees. Explain this.
Sure, we sit down and discuss where you are most comfortable with your assets. If you are comfortable with 100% of your money in the stock market at risk, you would be ball number 1 or all 100% red. If you're a individual that has no tolerance for risk or no tolerance for principal risk, you would be in that safe category. Your ball would be 100% green, or it looks like ball number 7 on our chart here. So the question that we would pose to you is, today, if all of your money were in cash, would you be most comfortable putting everything back into red ball number one, all at risk, or would you be slightly in the market? So you wouldn't be all red ball, you might be a percentage red ball. And that would be, if you could put that up for another second, you might be, maybe you're 50-50. So you're not ball number one, you're not ball number two, you're not three, maybe you're 50-50, and that would be ball number four, where you're comfortable with some risk, maybe half risk, but you're not comfortable with the other half of that.
Are most people ball number 4, 50-50? Or where do most people fall?
We'll give you two answers.
No answer.
There's no answer.
Okay.
Because you could be 50-50 today, but as you get older, or you're not adding to the pile of money, you may want to have less risk. Therefore, you gradually become more into the green side and less to the red side. And it's an ongoing, process based on your set of circumstances at the particular time you're going through the analysis.
What's interesting, on last week's show, we talked about this. We're going to probably talk about it on next week's show as
We
well.
talk about this forever, right?
For a while.
Yes.
It's an ongoing theme on our show. It's discussing your own personal risk tolerance. The question you asked me last week was, where are you most comfortable with having clients' assets? And the answer to that is, it's not our comfort level.
It's theirs.
It's
right?
the individual's
Right.
comfort level. Where are you most comfortable with your assets? It's not our thinking, it's where you're most comfortable. And each quarter, we reassess your comfort with the amount of risk that you're taking.
Here's what I think people are confused about. When you say risk and they say risk, sometimes that's two different things. For example, I said the CD, the person with getting 1%, he thinks or she thinks there's no risk, but obviously there's a lot of risk there because they're not growing. So how do you help people understand what is risk and what is not risk?
Well, it's just pointing out, again, going back to the inflation cycle, you have a government reported inflation rate of approximately 2%. But if you look at the inflation rate of the things that everybody purchases, food, gasoline, those kinds of things that factor into the cost of living, that inflation rate is closer to 8%. So which one do you utilize? Well, you have to utilize both, but you have to look at how my asset, and you have to point out to the client how this asset, from a buying power point of view, is not keeping up. So there are, in today's environment, there are so many different vehicles that people can utilize that can give them an opportunity to participate in the markets, but not have the exposure to the downside of their deposit based on the different things that are currently available.
We're coming up on a break, and we're going to talk a lot about this on future shows. I have the answer. You have a financial stress test which people can take, correct?
That is exactly
And it's
right.
complimentary, and that's how they can find out what their true risk tolerance is.
Exactly.
Correct? Okay. More to talk about here on Molotsky on Money with Stan and Lee Molotsky. I'm your host, John DeMasi. Yeah, we have plenty more to talk about, including some of your questions, and we'll do that right after these words. Stay with us.
Balancing safety and risk in your portfolio is very important. An easy way to do this is to use the rule of 100. The closer you get to retirement, the less time you have to recover from losses. Not adjusting your risk as you age can have a traumatic effect on your retirement. This system will provide you with the percent of your nest egg that should be allocated to either safe or volatile investments. Do you know how to classify your assets? Do you know if they fit your risk tolerance? Give our office a call today for a complimentary Rule of 100 report.
Welcome back to Molotsky on Money with Stan and Lee Molotsky from the SHM Financial Group. I'm your host, John DeMasi. If you would like to get in touch with Stan or Lee, from time to time here on the show, you'll see their number on the screen. You can get in touch with them. It's toll free. They also have an email where you can send them your email questions. So feel free at any time to contact them if you have a particular question or a situation. And I suppose, Stan, that you probably talk to a lot of people during the course of the week who you've had a radio show for years. I know you talk to a lot of people there, and now you're going to be talking to a lot of people watching you on television.
By the end of the day, by the time I get home, my wife will say, what happens, and it's like sometimes my voice is gone because of the constant, which is, I love it. I mean, it's the constant kind of thing. And people, we have a lot of friends who have retired, and a lot of times they'll say to me, well, Stan, when are you going to retire? And before I can open my mouth, my wife will say, he's never retiring. My goal is to retire when I'm 110. That's
Right.
my goal.
Yeah.
I love what
Right.
I do. Fortunately, Lee works with me. We have some great people at our firm. So I'm going to keep doing this for as long as I possibly can, mentally and physically.
He's just getting rolling.
Just getting
Right, I was just gonna say, he's just getting started.
The greatest thing about this business is there's so many things going on. This lockbox in the cloud thing is
Yeah, we talked about
fascinating.
that in the first
Well,
segment.
I mean,
of the show,
that,
yes.
that's an amazing thing, and there's so many opportunities to do different things within this business today that didn't exist, let alone when I started in 1958, but didn't exist even 6 months ago. It's just moving in a direction that's going to be unbelievable.
You have a lot of things, a lot of tools at your disposal for clients that can help them see where they're at with their financial picture. Is that correct? And shows them, it's sort of like a check system. This is good, that's not so good, correct?
Exactly. I mean, there are, stock brokerage firms that are excellent. There are insurance entities that are excellent. Our job is to take those two things, put it together with the tax planning and the estate planning, and merge it together and give the client the perfect, ideal plan. But it's a plan, and you have to have a plan. You have to adjust the plan. You have to modify the plan and make sure it's doing what you want it to do.
I was going to ask Lee what are some of the common questions, but we have a question here that was emailed to Lee. So we're going to show them that right now, and then we'll get into some other things. I know you wanted to show them a new service, but here's a question from Helen in Whiting, and Helen says, I read that income tax and capital gains taxes are increasing for high earners, but they seem to be the same as before. What's going on?
Well, the government, in its extreme wisdom, has decided to modify and change the tax structure. They did it, and it will be effective not for the 2012 tax return that hopefully everybody has filed, but it's for the 2013 tax return, where based on your income, your tax liability will probably be, the higher the income, the higher the tax liability we will have. So it's for the 2013 tax return. And by the way, we're talking about the email questions. What we'll do, anybody that does email us a question, we will send to them that estate planning guide that we put together. So anybody who sends an email question, we'll send them this estate planning guide. And if we should use their email question on our show, we'll give them a $25 gift certificate to Wawa.
Well, I have about a dozen questions, so you...
We were not going to use
I'm
yours.
not,
Not
I'm
gonna
not
use
eligible.
yours.
I didn't think I was. Lee, speaking of questions, what are some of the common questions that you get when you sit down with a client or a potential client?
Initially, one of the biggest questions is, am I positioned correctly? Are my assets, do I have too much at risk, or am I not taking enough risk? And do I have enough money to retire? And it's all relative to where they're coming from. I mean, do I have more than my peers? It depends who your peers are. And it really shouldn't matter whether you have more than your peers or less than your peers. It's a matter of, do you have enough to be comfortable to live on and to live a comfortable life in retirement? And some of the things that we do revert back to the red ball, green ball, where it's a matter of constantly modifying their red ball, green ball, or their balance.
People have a tendency to forget that if they have the same money that they had 5 and 6 and 7 and 8 years ago, they're behind. Why is that? If they have the same, they're not behind. They are behind because of this thing called inflation. Inflation eats away at the buying power that people have. So it's not important to have the same amount of money that you had in the past. It's important to have the same amount of buying power that you've had in the past. And going forward, with what the government has been doing lately as keeping interest rates lower, at some point these interest rates will go higher, and at some point inflation will be higher than what it is today. So the buying power, you have to increase your buying power just to be even. And that's critical in the planning process.
We did a statistic on the radio show a couple of years ago, remember? If you had $100,000 in 1998, that is worth $46,000 today.
That's correct. In other words, you would need, in effect, that 100,000, you would need like 210 in order to have the same buying power today that you had in 1998.
That's 15 years. I mean,
Well, and not only that,
Right.
when you look at what has happened, the interest rates have been relatively low, so therefore you have to use other assets in order to get the buying power in conjunction with what you actually need.
If you really think about it simplistically, if you earn 3% on something, and you're in a tax bracket of 28% plus federal plus state of New Jersey 5, that's 33%. Your 3% earnings are really only 2. If inflation is 2, your net return after taxes and inflation is zero.
Yes.
Right.
So
Okay, that's good, but I know we're coming towards the end of the show. I know you
Sure.
wanted to show this.
Yes.
This is part of, I said you have a lot of tools
Yes.
for clients and potential clients to help them. You're going to show this.
Sure.
This is called, if we can focus in on that, guys, Custom Annuity Policy Review. Now, what does this mean? Tell me what it means.
What that means is we take a look at if you have an annuity, and many people have an annuity, whether it's a fixed or a variable or index annuity, whatever the case may be. What we do is we take a look at the annuity, we run it through our system, and we take a look and report back to you via our Custom Annuity Policy Review Report, which is about a 5-page document. It gives you the expenses, the results, the returns, the after-expense results, so you can actually see what it is that your annuity is doing for you. And it's important, just as it is when you drive a car, you know what the price of gasoline is, but you don't really know what the true cost of running that vehicle is. So this report will show you what the internal expenses are relative to the performance of your funds.
And the expenses are critical. You know, if you can cut back on expenses, that's that much more money that goes into the investment or goes back into your pocket and goes into the ability to preserve buying power.
And a lot
that's
of these,
critical.
excuse me, Stan, but a lot of these places or a lot of these people, I know you've talked about this on the radio show, they have fees that are kind of hidden sometimes that you don't know their fees.
Well, let's say that they're not as
Obvious.
right up front as
they
you would
sh-
expect them to be.
As they should be, let's put it another way too.
So again, what this report actually just does is kind of shed some light on what it is that you have.
I mean, our purpose, our goal, not only with the radio shows that we do, but with this program, is to educate the people as much as we possibly can. You know, the old saying, an educated consumer is the ideal consumer because it makes our job that much easier. So the more we can educate people, the better it is for us in our particular practice, and certainly the better it is for the individual person who is educated.
Have you educated Lee?
We're working on it. It's an ongoing, it's a process. But you know what's more important? He is constantly educating me. That's the beauty of having him working with me. Not only have he learned from me, but I have learned immensely from him, and especially if I learn from his 2 little girls.
Well, you know what that saying is, time flies when you're having fun? Well, we're coming to the end of the show. That's going to put the wraps on another edition of Molotsky on Money. Don't forget, if you would like to reach Stan or Lee, the phone number was on the screen, the email address, you can contact them at any time. For Stan Molotsky and Lee Molotsky and everyone at the SHM Financial Group, I'm your host, John DeMasi. Always a pleasure. Thanks for watching. We'll talk to you next time right here with Molotsky on Money. Take care.
Since 1958, the SHM Financial Group has been providing sound financial insights and strategies for people just like you. Founded by Stan Molotsky, the SHM Financial Group believes in safety, security, and preservation of principal. For more information on how the SHM Financial Group can help you, contact them at 1-800-MONEY-SHM. That's 1-800-666-3974, or visit them at shmfinancial.com.